Today's session, right? Questions HDB upgraders should be asking themselves in 2021. And as with what we've always done, we'll be sharing some recent articles that pick our interest, and we thought got some interesting points to share with you guys, right? So on the 26th of March, on the Business Times, they interviewed the general manager of CDL, right, as part of the new Irwell Hill launch. But Irwell Hill aside, I boxed up what are some of the interesting points that I thought could share with you guys. First one, right? I know it's a bit small, but we will definitely be putting this up in our Facebook page, so you can go there to get the full article, right? So what they are saying, right, is that they expect foreigners to come in once the whole COVID situation is over, and I'm not sure about you guys, but when we talk to our clients, especially those with exposure in the APAC region, in the international region, a lot of them are saying that Singapore actually has done a really good job. I think the one most of us know, but what many of us don't know is that they have actually taken advantage of the situation to attract a lot of tech firms into Singapore, right? We are attracting a lot of professionals into Singapore. And as with one of the more recent news, with the PRC family buying up the entire condo at 4,800 PSF, high net worth individuals also looking to move their money into Singapore, right? So so that's the first point. The market has moved in the property market, but we see it possibly moving even more as the demand starts to flow in after the vaccination is all done, right? And on the bottom right, he's actually sharing a bit of thoughts about the developers' mindset in the en bloc market, which is something very interesting, right? Something that we don't see happening quite as yet, even though the developers' inventories are coming down significantly. So what he's saying is that those above $1 billion may have some resistance for developers to go and take up those sites, because the developers are still very cautious with all the measures that are still currently in place, the APR measures, things like that. So, but what we may be seeing, right, is that the developers will all flock to the sites that are sub 1 billion, and those sites will attract a lot of bids, and that would possibly push up prices. Right, next.
So the second article is really relevant to what we're talking about today, about where HDB upgraders are moving to. So a lot of interesting data about what they're buying and also at how much, and some trends that we see is that affordability is coming up. There is a rotation of demand into the resale market as compared to the new launch, as inventories are starting to go down. So you can keep an eye out where they are stating the popular resale condos having an average PSF of about $1,150, and you'll back up our suggestions later on. That said, they are also mentioning that there are an increase in the percentage of buyers going into the CCR, and examples that they quote are the launches that are at 1.3M at the M and 1.8M at Marina 1, which are actually really small units. So we're not quite sure how these units might fit upgraders. But that being said, the data that they're using to track this information just shows the address where the purchasers are declaring where they are staying at. So it doesn't mean that they are actually selling their HDB and moving their entire family there. Yeah.
Right. So while we don't doubt that there may be folks that can afford CCR properties that are currently staying in HDBs, but it will not be a huge number, and if you are going to buy a CCR property, make sure that you go in with your eyes open, that the considerations of a CCR property is very, very different from a RCR or a OCR property.
Okay, so let's get started on our topic today. So these are some of the key questions that we feel are, quite important for HDB upgraders to be asking themselves. So, example like what's happening in the market now, what's going to happen in the future, how well do you as an upgrader understand CPF accrued interest? And how should you go about planning your move? The move meaning you're upgrading, the selling, and the buying, the whole timeline. And how can you lower your uncertainty? Because it's going to be quite daunting, right? Moving your whole family, buying a larger asset. Yeah, so Alvin will share more.
Okay, so what are the trends of the HDB resale prices, right? We are focusing more on resale prices lah. In the last 7 to 8 years, right, it has been on the downward trend from 2013 to 2019. But last year, in perhaps the worst year out of the last 10 years, prices actually edged upwards. So we are going to study what happened in the last 7 to 8 years that resulted in the drop in price, understand what happened last year that caused the increase, and after we understand all of this, right, try to forecast what's going to happen in the future.
Okay, so what caused the prices to drop between 2013 to 2019? You can see the HDB resale price index have a significant dip from 2013. So we like to use the simple terms so that everyone can understand, and we are going back again to supply and demand. So on the supply side, after the 2011 elections, where there were a lot of unhappiness with the people, not being able to get their BTO, they either had to BTO multiple times and still could not get a queue number, or they try to go to the resale market, but yet they are faced with super high COV. COV is a cash over valuation. So because of that, the government ramped up supply significantly, peaking at 26,000 units a year in 2017, and that's from a previous average of about 7 to 10,000 units a year only.
Right, but the real strike was on the demand side of things, right, where the government instituted many rule changes, right, of which the most critical one, I must say, was the mortgage servicing ratio, MSR, which is why I put it in bold lah. So essentially what that means is that the loan you can take to buy a HDB is capped at 30% of your monthly income that you can use to finance the mortgage, and then there's a calculation whereby they will work backwards. Last time, right, whether you want to buy a HDB or you want to buy a private, they evaluate the loan the same way. But after 2013, the evaluation is different. Essentially, having the amount, having your budget that you have to buy a HDB as against if you want to buy a private property that utilizes TDSR. Okay, you couple this with the fact that there's some rule changes with regards to how PRs can buy resale HDBs also, right? They now have to wait 3 years after getting their PR, then they can buy a resale HDB, versus last time where they can buy immediately, right? So you put these two things together, a lot of the PRs are then more now swayed towards buying more affordable condos, those under $1 million, because if they want to buy a HDB, they will have to, number one, continue renting for the next 3 years and then buy it with a lower budget because of MSR. Additional hits throughout 2013 and 2019 is the constant government reminder about the 99-year leasehold of HDBs which didn't help prices. So all of this congregate together to result in that drop in price over 2013 to 2019, right? So what happened last year and this year?
So because the supply side factors were significantly hit due to COVID, especially during the circuit breaker period, whereby construction sites were not in operation at all, and because of that, there's also a delay in the BTO exercise. So when the BTO resumed, and with everyone being cooped up at home, or decided they want to move out, they want their own space, and also, with more people working from home, they need a larger space. So all of them go and apply for BTO, which is overly subscribed. And because of the oversubscription, a lot of people are also ended up disappointed. So not only because, if the BTO exercise delay and the construction also delay, if you are lucky and you get a number, you still have to wait for 5 years at least before you get your house.
So inevitably people go, never mind, screw it. I know resale not as good, but I got no choice. I want to start my family now, and I'm not going to wait 5 years to do it. So then they go into the resale market, which explains the short-term demand surge in the resale market, as people are willing to overlook the rules, and the obvious downsides of resale property, which then result in the increase in prices. Okay, right? So these are some of the news articles to illustrate the fact, right? There are some BTO flats that were delayed in. So near-term supply, right? Those that are wanting to already collect keys to their BTO also delay, and those that are bidding and those that are getting their ballot numbers, they are looking at like 60 months at Bishan Regis. Bartley, you get 48 months, so 4 to 5 years wait time, which is a really long time. After that, you still have to consider, you still have to serve your 5-year MOP, so that's a good 10 years before you can think about doing anything else.
Yeah, so let's try and see what's going to happen after this year. So we know that on the supply side, things will eventually normalize and go back to normal, right? The BTO exercises will absorb the pent-up demand from 2020 as the government continue to push out more units, which they say they are definitely going to do so. And those units will hopefully not have such a long waiting time as the borders start to open up, and we can bring in more resources, we can bring in more help. Yeah, but on the demand side, what we want to ask ourselves is that, can this short-term surge, when we say short-term surge, it means short-term surge in the resale demand market, can it be sustained? And how we see is that if the rules remain unchanged, basically the function of trying to hold prices down by tapering demand. Remember that the government's plan is to always make public housing affordable, and HDB is our public housing. So they have to use all their bullets in both the demand and the supply side to try and make this happen. So when things resume, we definitely see demand shifting back into the BTO, because I think most people would rather get something newer, and everyone knows if you get a BTO, it's more or less, you sure make a little bit, it's just how much, right? So when we see the prices moving, it should resemble the 2013 to 2019 curve more than the 2020 to 2021 curve.
Moving on, right? I picked out some interesting data from the HDB Annual Report. So actually HDB publishes an annual report just like a listed company, and you can find it on their website. In it, they have quite a bit of interesting data. So here is one of them, right? On the demand side. So what I'm trying to share with you is, so just now Elizabeth talked about some of the short-term demand, how that may not be sustainable in the long term. And so now I want to share a bit on long-term demand, what it looks like for public housing. So you see the red box number a bit small, but what it illustrates is the demand for public flats, right, from 2011 to 2016 stood at 136,000 flats. But between 2016 and 2020, it dropped to 89,000. Okay, so demand dropped. So the chart on the right, residential population in Singapore against HDB flat. So you notice while the population is going upwards, right, the trend line for and the curve for those staying in HDB is level at 3.2 million. This is also another graph that is shared in the HDB Annual Report, right? The resident population. So you notice the percentage of the population staying in HDB flats is trending downwards. And this is also interesting to note is because income ceilings are coming up. So today it's at 14,000 for HDBs and 16,000 for ECs. So by right, it should absorb in and make it available to more people, but somehow or other people are not taking up that option. So it's something to think about.
So other than the pure data that we have been sharing, that Alvin has been sharing you in the past few slides, we thought that, the two of us as agents that we are on the ground doing the sale and purchases, right, speaking to owners and buyers, we can share with you what is the ground sensing that we get. So these are the few units that we have sold recently, like pretty recent lah, and we wanted to highlight that actually out of half of the 4 that is on screen, half of them are actually sold with COV, cash over valuation, which is actually pretty rare for mass market HDBs before 2020. You can see the locations where these units are. They are not in the most popular or most central of locations. So when we talk to the buyers and we ask them why they are willing to match the high asking price of the sellers, the reasons that we hear are that they lost out their chance on a unit previously despite putting in offers at valuation, and they tried BTO many times. They just couldn't get a number. They're sick of waiting, or they just simply couldn't find a suitable resale unit in that area. So you also realize that all these units, right, were all sold within, I think, in fact, 2 weeks, 2 weeks of listing. And pre-COVID, it usually takes us like 2 to 3 months to sell. So we are seeing a really big surge in demand at this point of time for the resale HDBs.
Okay, so what we see, right, how to summarize, what we see is an excellent window of opportunity. You see that window, that nice window that I put over there, window of opportunity for HDB upgraders at this juncture. But this window won't be open or won't be so big for so long because there's a lot of factors that is coming in to affect that window, right? Because top left, potential new measures. So what I mean by that, because if COV gets out of hand, so recently we have a 4-room HDB with 18,000 COV. We have 5-room HDBs at like $50,000 COV. If COV gets out of hand, the government will definitely step in to do some sort of measures to try to control that, because they have learned their lesson from 2011, which is why we see all these rules coming in. So there may be potentially new measures coming in place if COVs get out of hand, right? Now, of course, like we mentioned, supply will continue to be pumped into the market in terms of the BTO supply. The demand, we have showed how short-term demand may not be, that short-term surge in demand may not be sustainable over the long term. Long-term demand trends are also trending downwards, right? So the bottom right point, right, your affordability, how it may be affected. We're going to touch on this later on, okay?
So before we move on, we wanted to touch on this sensitive topic of CPF Approved Interest. So a lot of people hear about CPF Accrued Interest and they get very scared because I think there are a lot of information out there that's using it as a scare tactic to say, be careful of how you're using your CPF, right?
Or like, if you don't sell, you will die to CPF accrued interest, that kind of thing, which is a bit more of we feel more of a scare tactic.
Yeah, but how we see it is that it's important for HDB owners yourself to understand how a decision, between a few years apart, right, can affect you whether or not you can upgrade. And so let me try to explain this, and I hope you all can see the graph properly, the blue line that is straight at the top, so that is the valuation of the HDB. And fingers crossed, let's hope that with time and with age, the valuation, stays the same. Okay, your outstanding loan, which is the orange line, decreases because you have been paying your flat. And so then after that, look at the green line. The green line is the CPF refund, which includes your CPF accrued interest. So that increases, at a faster rate, of which the outstanding loan is decreasing because of the high interest that CPF is charging. That means the amount that you return into CPF. And because of that, your dark blue line, which is your cash proceeds, decreases. So you notice that red line in the middle. That red line is when your cash proceeds are zero. So why we say the decision changes in a couple of years whether you can upgrade or not, right, is based on that red line. Because once you pass the red line, it means that you don't get any cash from selling your property. And we have seen many cases, right, where the bulk of funds for the down payment for the upgrade comes from the sales proceeds and also the cash proceeds. Because if it doesn't come from the house, then it has to come from your savings, which we understand for families it may not be easy, or it may not be very comfortable for you to dig into your savings for this upgrade. So our caution to all the HDB owners who are thinking of upgrading, maybe not now but in the future, just to think about it, understand CPF accrued interest properly. And if you're saying it is okay if there is CPF accrued interest because it's going to come back to me anyway, you're not understanding this fully.
So there are a lot of articles out there. Today's session is not meant for us to explain in great detail what CPF accrued interest is, right? But just know where your red line is, right? And then you plan accordingly. Okay, so what are some of the questions, right, you should be asking yourselves? Okay, number one, do I require the cash proceeds from the sale, right, for my upgrade? Because in this upgrade, right, you definitely need cash. You need cash. Okay, if you buy a resale EC, if you buy a new EC, you will need to pay resale levy, and that is in cash, right? Or even if you go for a new BTO, right, you will need to pay resale levy, which is also in cash. Okay, so if you want to buy a private property or if you want to buy an EC, minimally 5% has to be in cash. Of course, the rest you can use cash or CPF. So if you have a lot of CPF but no cash, you also cannot upgrade. Okay, then my last point, are you being lulled into a false sense of security? Okay, because like what Elizabeth has mentioned, right, once you cross that red line, you don't get any cash when you sell your property. Last time, right, in the earlier generation, the Merdeka generation, where the property prices came up very quickly, they will not have to worry about that red line or going into a negative sale. But in today's market, as Singapore's economy matures, right, we would not expect the prices to spike like it used to be, right? We have seen the trends, right? We have shared with you the trends, we have seen the trends. So you have to prepare for it, okay? So if you need cash, right, don't use so much CPF, okay? And for fully paid off, right? So last time also everybody like to say, I want to faster pay off my property, things like that. Probably not such a good idea after you understand CPF accrued interest properly. I do have a good article that we shared earlier today in our Facebook page, so you can go over there and read about it. It explains whether or not fully paying off your property makes financial sense or not. Yeah.
So what do we really understand about the fundamentals? What are your options available in this upgrading, the planning required, your partner's requirements, financial burden time, so many things, right? It's like, this ship that was being stuck in the Suez Canal. Yeah, and your upgrading plans is just, it seems very daunting, right? And how can you go about, with this whole process?
Yeah, I did this, by the way. Quite funny, right? Let me know if it's funny, but yeah, I don't know. May have missed the boat. Right, okay. So common challenges that HDB upgraders face, right? Challenges that we see a lot when we meet clients, right? Husband and wife not aligned, cannot agree on the requirements. Yeah. Number two, viewing fatigue. So a lot of the times, the normal way to go about, right? Normal way how some people will go about their upgrade, right, is discuss, then okay lor, let's go and look, right? I see if I can see anything I like, then I decide to sell, right? So that results in sometimes a lot of fatigue, because then when you see one party like and one party don't like, then fight, then fatigue again. Okay, so number three, timeline. How do you plan a timeline? How do I make sure that I don't shift 2 to 3 times? Then sometimes it seems absolutely impossible to achieve something like that, and then just decide that it's too much of a hassle, forget it, right? And number four, lack of knowledge, right? So there's a lot of fear involved in upgrading, but we put that down to a lack of knowledge, because if you really understand everything properly and clearly, there shouldn't be that much fear involved, because you know exactly what you're doing.
So we like to use this 4-point GPS, to help guide our clients in deciding how to go about planning for their upgrade. So we always ask them, between budget, location, size, and growth, which one is the most important to you? You have to rank it in order. And a very common reply that we get is that all is important. But the fact is that you really can't have everything, and you have to rank this. For example, if you want a very big size, but your budget is fixed, you will then have to compromise on location. So let's go into each of these points in a little bit more detail.
Okay, so budget. So how does one do budgeting properly? Okay, so never ever base your budget on the bank's in principle approval, because the bank's in principle, especially dual income families, whereby most of the time your income can allow you a very, very high budget. But the bank's IPA does not factor in point number two, reserve funds. They do not factor in for you in the event that you lose your job. Are you able to sustain the mortgage payments over the next year or so? So that is what we actually base our budgeting planning on, right? You work your way backwards, right? Figure out first what is a comfortable reserve fund that you need to have, and then you work your budget backwards from there. A good rule of thumb is that if assuming one party lose your job, that you don't really have to worry about the mortgage payments too much, at least for 1 year. You also don't want to make the mistake of over planning, right? Then you budget way too much in reserve funds, because if one party lose the job and within 1 year cannot find a replacement job, most likely will sell the house lah. You won't continue to keep the house. Okay. Then point number three, right? We want to clear off one very common misconception, especially among HDB upgraders. Okay, mortgage, your monthly mortgage is not an expense, at least not the full amount. What is your expense is the interest, the property tax, and the monthly maintenance, right? All of this, right? The interest expense probably only takes up half of the monthly mortgage. The other half of the monthly mortgage goes into capital repayment, which in other term we can term it as forced savings. So for those of you who struggle to save money, right, you can look at this whole upgrading thing as a way, because we had clients that told us this: I'm doing this upgrade because I want to force ourselves to save, because half of that amount that you pay out every month to service the monthly mortgage goes into savings.
Okay, and then for size, so we put out 2 layouts here to just give you a little bit of sensing. So I think the idea here is not to be so focused on the square footage. So this is a 861 square feet unit, and it was built in the era of bay windows. So out of the 861, 61 square feet goes into the bay window space. Okay, so after you take that out and you minus off like the balcony and all that, you are getting something maybe at only 600 plus square feet for a 2-bedroom, versus this layout whereby it is 893 square feet with no balcony and no bay window. So all square foot is all effective usable space. And I think this 893 square feet, right, would be a very equivalent space to something that is larger than maybe 1000 square feet in other condos, because a huge amount of space goes into the balcony. So some of you guys may make the mistake of insisting on a certain size of a unit in searching for your property, but actually, in fact, you may not be having the most effective of space. So our recommendation is don't be so focused on the square foot number. Rather, you should go down and view the property and feel the layout. See, there are some units with very effective layouts, and hence, a small size may end up feel very spacious.
So the term, right, basically the phrase we like to use is you stay in the size, you don't stay in the square footage. Okay, yeah. So and another thing is, for size, this requirement out that 4 points GPS, right? We usually recommend pushing the size part to the last lah, right? Consider the rest of the thing first. Don't let it be your single biggest factor moving forward. You may jam yourself. Yeah. Okay. Location. Right, questions to ask yourself: are you willing to sacrifice location for space? Right, I give you an example. Right, in Tampines, a new condo, you can, for 1.63 million, you can get 1238 square feet, 4-bedder. Right, but if you want to go to the RCR, Aljunied, 1.6 million will get you a 3-bedder at 1000 square feet. Or if you want to go to the CCR, right, the same price, 1.6 million will get you a 635 square feet, 2-bedroom in Bugis. So this 4-point GPS really will point you in the right direction, which is truly more important to you, right? Especially considering how COVID-19 has changed a lot of the work arrangements, changed our preferences, especially on location preferences, right? So for those of you who are joining us for the first time, some of our previous Facebook lives, we talked about all the opportunities that are available in the market because of how COVID-19 has changed the market. Do go and watch some of those videos. They are available on our Facebook or on our YouTube, right? Number 2, for location, most of the time HDB upgrader, they want to their location requirement is also based on kids' schools, right? So we know that is very, very important. As a matter of fact, this one maybe is the single reason why you are doing the upgrade, so non-negotiable, right? But if that's the case, right, make sure that you have exit options, right? Make sure you have at least, I have to buy the area, right? And I have to buy, let's say, this particular property. But if that property in the next 10 years cannot sell, what are some of the options that I may have, right? Our favorite method D is something that you can think about. Again, if you don't know what's method D, message us, we can share more of you. We just can't share it in a public forum like that lah.
Okay, so growth. Growth is actually just capital appreciation, and why it's so important is to help cover your the other sides, for in case you need to move from this property into another one. So in order to prevent going to a negative sale, it is okay to use CPF as long as you are assured that your valuation will continue to go up. So you just need to make sure that you protect your cash and that it doesn't all lose it into CPF.
So some of the last points on top of the 4 points GPS is to understand your timeline, which is also another very critical requirement, right? Some things to ask yourself: do you have alternative accommodation, right? Because if you do, it's going to make the upgrade a lot easier. Okay, what is the holding period for your next property, Okay, how long you want to hold it for, because then you can actually calculate what is the expected CPF accrued interest that is going to incur, and how much that property has to go by in order for you to prevent yourself from going to either a negative sale or the property sucking up all that cash that you have put inside, right? Then do exit strategy planning, right? We talk about a lot about exit strategy planning in our multiple previous Facebook lives lah. Options, right? Different options available to you at different junctures, short, mid, long term exit, right? Something we want to touch on also, and very applicable to most HDB upgraders, is considering ECs again, right? ECs sort of lost their attractiveness in the last 1 or 2 years, right? Yeah. Because a lot of the condos, they were priced very close to the ECs, right? But as those condos have been sold, right, and the PSF start to move up, right, the EC PSF, if you notice, have remained pretty stagnant. So remember that first article that I shared with you, a lot of the popular resale condos, they are averaging about 1,100 PSF. Today the ECs are going at about 1,000 PSF, slightly above 1,000 PSF. So in that sense, we feel the per square feet is still very attractive. Some of the other attractive points for ECs is that you don't have to pay APSD if you buy a EC, right? Because you cannot keep another property if you buy the EC, right? And for upgraders, especially those that don't want to sell and go out on rental, right? You don't need to sell first. If you can afford the 25% down payment, you can choose the deferred payment scheme, then continue to stay in your HDB until the EC is completed, then move into the EC. Another attractive point which is just come to my head, not inside here, a lot of the ECs are already halfway through construction, right? Because the fact is that ECs can only sell after their foundations are complete. So usually you buy an EC, you can collect keys in about 2.5 years time.
The wait time is a lot shorter.
Right? And now that there are still balance units of some ECs, like for example Piedmont Grand, that I think you can collect keys in I think the next 1 year. It's a very good value proposition, because usually you have to pay higher.
You're not locked
and wait
in
longer.
For so long.
Correct. The lock-in is not so long. Right? Next.
Okay, so how do you lower your uncertainty?
Okay, so a lot of people, there's a lot of fear usually when it comes to upgrading, but like we said earlier, we pinpoint that down to a lack of knowledge. So which is why we are doing this session, which is why we do so many Facebook lives, is to share with consumers, upgraders, as much knowledge as we can, so to lower the fear. Because sometimes fear is irrational, right? You just never go and understand it, but then that's why you are scared. Then it holds you back. So the more knowledge hopefully will reduce the amount of fear. Number 2, understand a lot of case studies, right? See how people have done for. That is a very Singaporean Asian style of thinking. If somebody have done it, it must not be that hard, and then maybe I can replicate it. Which is something that we focus a lot on in more face-to-face, more of our face-to-face consultations lah. Then number 3, right? Planning properly. So the more comprehensive your plan, the better your plan, the lesser uncertainty there will be lah.
And how to go about planning, we actually have a systematic approach. So we came up with this ultimate guide to upgrading, and we have updated it for 2021. And by going through this guide, you will, it's a more detailed questionnaire and explanation on the things that you have to consider if you're thinking about upgrading. So understanding your needs and requirements, listening, to your challenges and constraints, and then we will also educate you on the market so that you have knowledge, you are certain in making the steps that you choose, and then we will tailor a plan for you, and then we'll take action together. So let us know if you are keen on receiving this guide. We can go through it with you also, or we will just send it to you first, soft copy. Drop us a PM and we'll send it over to you after that.
Kid once, yeah, Kid, okay. Later I send to you. Yeah. Who else want to just drop us a message, say you want. Later we will send it to you.
Yeah.
Right, so today's session quite long, very, very intense in terms of the amount of info that we've shared. So we are going to open up the questions to the floor. If anybody have any questions with regards to what we have shared, or as a matter of your own situation that you're under, right? Right, just leave your questions in the comments below. We'll be around for the next 2 to 3 minutes. If anybody have any questions, we are happy to answer them for you.
Or if you're a bit shy and you're not so comfortable with sharing your situation on a public forum, then we have our numbers there, or you could just drop us a DM and we could send it over to you.
Yes, guys. David, Melvin, Linda, Ken, we'll send it over to you. Dennis, Sioki.
Could you guys PM us your contact details if we don't already have them, so that we can send it directly to you?
We'll be in touch lah. We'll be in touch. But if we do forget, you can take down our numbers and we'll make sure we send it to you. Okay. So questions, anyone? Questions, anyone, with regards to what we have shared? Or if you guys have any ideas what you want to hear, what you want us to discuss about in our next Facebook Live, also can put
next month in April.
Yes, and April will be the next Facebook Live. So anybody wants us to talk about any particular topic, right? Let us know. Okay, if not, because every time I say bye-bye, then the question will come in. Then I feel very paiseh. It feels like I never answer your question. Okay, so last call. Any questions? Last call number 2. Any questions? Okay lah. So anyway, our numbers are there. Feel free to text us.
Just drop us a DM.
Right. So till next time. Bye-bye.
See you.